Welcome back. DCM Shriram has reported a good set of Q3 numbers. The revenues have gone up by 12% on a year-on-year basis, EBITDA up 11%, and profit too has seen a growth of nearly 9%. We're now joined by Amit Agarwal, Group CFO at DCM Shriram. Thank you very much for joining in. So for the first 9 months, your revenue growth stands at close to about 8%. What are you likely to end the year with in terms of a growth rate, and what would be the key drivers for Q4?
Yeah, so I think we should end the year with a similar kind of growth rate on top line. Now, as far as Q4 is concerned, I would say, one, it will be better than what we had in the same period last year. And the other thing is, I think chemicals business is the one which will lead to this turnaround in the performance for Q4. Given the fact that chemicals in this year, we have had 3 capex projects which have been commissioned in the first half of the year. So that is leading to better volumes, and also the prices have been better. I think as a result of this, overall our performance for Q4 should be better than the same period last year.
Mr. Agarwal, would you be able to quantify that in some sense, especially chemicals business largely driven by caustic soda price fluctuations? Like you mentioned, it's been very volatile. Q4, how has it panned out so far, and how do you see it panning out for FY26 as well, given the fact that you also have a lot of capex lined up in that particular segment?
Yeah. So in terms of the prices for the Q4, the prices they've stabilized and they've corrected slightly as we see. But prices do remain volatile in this period. So I feel that prices would be better than the same period last year, and although may not be in line with what we had in Q3, but the volumes will be better. So therefore the earnings will be better. Now, as far as FY26 is concerned, again, because these projects came in line in H1, so volumes will definitely be better, and which should lead to growth of top line as well as bottom line. As far as the product prices are concerned, I would say, in our kind of business, it's difficult to give that number. But I do feel that for most of the products that we are in, we've seen the lows in FY24, and FY25, as we see, is already turning out to be better. So we hope to carry on the same trend in FY26.
So you're saying FY25 growth should be similar to the 8% growth seen in the first 9 months, right? A high single-digit kind of a top. So for chemicals, which is driving the growth led by higher volumes, your capex plans and stable prices, what could the numbers look like? Because for the chemicals business, already we've seen nearly 2,000 crore of a top line. Could you end the year closer to 3,000 crore rupees? And what could the growth, and how much will you be able to build on that going into FY26?
So I don't think we will end with that kind of a top line, 3,000 crores. I think we should add another 500 odd crores as a top line in Q4. 500 to 600 crores. Yeah.
500. And for FY26, so assuming you end the year with 2,600 crore of a top line for the chemicals business, how much will you be able to build on that in FY26? And will that continue to be the driver going into next year?
See, we should see on that kind of top line, we should see anywhere between 10 to 20% kind of an increase. At least, 15 to 20%. The range is a little wider given that the prices are volatile, but volume growth should support that kind of an increase in top line.
Mr. Agarwal, from the time you've declared the results, there's actually been a material change as far as the entire sugar space is concerned, with higher exports now being allowed. One of the points that you've mentioned as far as the call is concerned is that, given the fact that both global and India's sugar production was revised downwards, there's a bit of pressure over there. So Q4, FY26, with the revised export norms, how do you see that particular segment panning out?
So, the exports have not been notified by the government right now. Yes, there have been news in the various media, but we do expect about 1 million ton of exports coming up. See, I would say the challenge with the sugar business today is on the margins, because the cost of production has been high of the last season and even in the current season, but the selling prices have not been in line. So just to give you a number, the cost of production has been higher by about 12.5%. Whereas the selling prices are more or less on the same range. So I think that is what the challenge is. The government has to push for exports, maybe higher than what they are targeting. they also have to push for or implement MSP, minimum support price, that will support the sugar prices. Sugar prices have to be above 4,000 rupees a quintal ex works for the business to be reasonably profitable.
And so what's the outlook for fertilizer and the Fenesta business?
Fertilizer is a small business for us.
Yeah.
As far as Fenesta is concerned, Fenesta, we are very buoyant about that business. Currently, the building material space is going through a slower growth than what we've seen in last few years. But I do feel it'll catch up. In Fenesta, we are also looking at building onto the revenue that we have by getting into newer platforms. The board, as you would have seen, has recently approved investing in hardware business as well. So I think that will help its backward integration, it will help customer experience, and it will also help us to develop a newer platform, both B2B and B2C. So I think we are quite excited about Fenesta as a business.
Thank you so much, sir, for joining us, giving us a sense of how Q3 panned out and how Q4 and FY26 is expected to pan out. Moving on, Sony